EA is one of the biggest gaming companies, and while gaming has developed massively since the pandemic, EA stock hasn't moved since 2018. First of all, EA has a few massive brands. They own EA Sports, formerly owned FIFA, now just FC, Formula 1, NHL. So huge, massive brands when it comes to sports games. They make their own original games sometimes. They own the Sims 4 brand, Apex, it just keeps on going. From Battlefield to FIFA to Sims, they have everything. They're not really a one kind of game company. And historically, that has brought on some great revenue growth. They just kept on getting more franchises over time, which they have developed, and slowly they monetized those games. Matter of fact, when it comes to the revenue, full game, so basically you going on and buying a game for $60 is only a tiny amount of the revenue. Most comes from live services, microtransactions, battle passes, skins purchases, all of that, pulling for cards in FIFA. They are the masters of turning a game into a continuous buying experience. And even if it doesn't have many microtransactions, stuff like The Sims, which brings out many DLCs. If you were to buy all the DLCs for Sims 4 on Steam right now, you would spend 1.4 thousand euros. This is what got you this explosion in value. Revenue since 2022 has flatlined. Now why is that the case? Many competitors came up, especially indie games. Now this is only for Steam, but Steam is the giant when it comes to gaming. And when we look at how much money is made on Steam, look at indie games, they have massively grown over time. And now they make 47% of revenue. While this is of course PC, most of EA's money is made on console, indie games are taking over. There are always new trending indie games. Repo, Undertale, Stardew Valley, all of these games became massive and are indie games, not made by big studios. And while of course EA is still able to grow overall, the gaming market is underlyingly growing, it's becoming harder and harder. Plus, when you have this many different brands, different money generating machines, you cannot replace The Sims 4. You cannot replace Formula 1, FIFA, Battlefield. And you're getting attacked from all sides, even when it comes to, for example, The Sims. Inzo is being released. It's a massive hit, and over the years it's gonna develop into way bigger than Sims is right now probably, if EA doesn't do anything. Now yes, they're bringing out some releases, but it's mostly just for the old brands. Sometimes they throw in a little bit there, something that they're trying out new, some smaller brands, but they haven't really developed huge brands. And just releasing new titles for your known brands, or bringing out a new DLC for The Sims, it just keeps up the revenue, but it doesn't make it grow much. If someone comes up to the F1, NHL, and says, hey, we're gonna make the game for you. We're gonna make an NHL game. We're gonna offer you more than EA. That is a huge competitor then. Of course, the name itself is enough. But a big name can always lead to competition. And EA doesn't need to lose the segment to the player. If someone takes away 10% market share, maybe that doesn't matter to the other company. But that is a huge chunk of revenue come from EA. And you don't have that many new hits from EA. The big one was Apex Legends, and that is already some time ago. Other than that, EA doesn't really develop that many new brands. So now you're being attacked from all sides. You have huge brands. And the issue is with huge brands, you need to keep up those huge brands. And if you still want to grow, you need to build up more brands. And what does that lead to? Huge research and development costs. While revenue has not even doubled, research and development went 2.5x. That is why free cash flow hasn't moved since 2017. They are spending so much money on their games. Plus, they did a few acquisitions. Those were mostly in the mobile segment. But still, this is not all organic revenue growth. So now we know the risk. You're being attacked, your growth is limited, what are your rewards? Tiny dividend, and while yes, the repurchases look huge, 1.3, 1.6 billion per year on average, the stock-based compensation is growing faster than the buybacks. So the buybacks are getting less and less and less and less each year. You have a little bit of net cash, so it's nice, they can still do some acquisitions. But overall, I see a company which hasn't grown since 2015, 2017 when it comes to profitability. A company which keeps getting more and more attacked. And that is normal. Competition is huge in the gaming industry. And unless you're really laser focused on one segment, which EA isn't, it's gonna be hard to compete on every front. For example, Take-Two with GTA and Red Dead Redemption has their two giant brands, which is a risk because if one flops, that is that gone. But you can focus, you can become the master in the industry. EA can't. Then I see 1.9 billion in free cash flow, minus 600 million in stock-based compensation, around 1.3 on a 37 market cap. That's a 28 multiple on the free cash flow. That to me does not seem like a multiple that is put for a company which is not fastly growing anymore and has huge competition right now. Now what should be our assumption in this case? Currently free cash flow sits at $4.85 per share. While the revenue might be growing fairly okay right now, the profitability is not. And you don't pay dividends with revenue. You pay it with cash flow. So I'm just gonna assume net income grows at around 4%, plus 2% in buybacks. That is what they have historically did, a bit more than that, but they're increasing their stock-based compensation, and they can't keep up with the buybacks to keep them at the same level forever. So 6% for the next 10 years, 18 multiple, it doesn't deserve the 30 multiple. Unless they go back to 15% to 20% in net income growth, they're not gonna see a 30 multiple in the long term, I think. 15% payout with a little deduction due to taxes, 62 in intrinsic value per share, currently trading at 142, 50% downside. Horrible investment. You would currently get a 1% over the next 10 years. Now what if it goes better? They re-establish their market position slowly. Maybe their investments work out really well. They bring out a few huge titles. So 12 growth over the next 5 years. Only then the huge new brands come into effect. 15. Plus they get a 20 multiple. Even then, we're off the current value. Even if I were to grow at 15% for the next 10 years, which they haven't managed to do in over 10 years, even then, we would not be at the value. And what if it goes bad? Basically, only 1% in profitability growth over the next 5 years. None after that. 12 multiple. That can happen. The competition is getting huge against EA. I don't think it's very likely, but it can very much happen. Then you make a minus 6% yearly return. So basically you're wiped out. So I'm not looking at EA at these prices. They are not my favorite type of gaming company. They're spread out over everything, very expensive, huge competition against most of their brands, and they're very reliant on a few high-ticket names. The 2% buybacks plus 0.5 dividend yield, it's just not worth it to me. What do you think? Write down below. Have a good day.